A very good afternoon and welcome back to day 2 of the 15th edition of India Digital Summit, organized and presented by Internet and Mobile Association of India along with Niti Aayog. As we're aware, this two-day virtual conference has been focusing on the theme Atmanirbhar Bharat, the start of a new decade. And hashtag 15th IDS has brought in thought leadership this year at various digital initiatives covering policies, business, investment, advertising, digital commerce, startups ecosystem, emerging tech, esports, among many other digital trends. Before starting off, I would like to take this opportunity to quickly thank our partners, our diamond partner Google, our platinum partners InMobi and Facebook, our digital growth partner Microsoft, our omnichannel partner Zendesk, our customer experience partner Adobe, our customer engagement partner Infobip, our gold partners Freshworks and Tata Teleservices, our silver partners Reverie Language Technologies and Philose, our bronze partners CrediWatch and InShots, our design partner Wiseape, our media partner Financial Express, and our PR partner We Communicate. So with that long list, let us now begin with the next session. This session is a panel discussion on the topic Strategizing Investments in Startups. And for the same, I would like to welcome all our panelists. First, I would like to welcome our moderator, Mr. Atul Bist, Senior AVP and Head, Technology, Media, Telecom, and Electronics Manufacturing, Invest India. Hello, Mr. Bist.
Hello, Rehan. Thank you so much for the introduction.
Along with our esteemed panelists, Mr. Sanjay Mehta, founder and partner 100x VC. We welcome you, Mr. Mehta. Mr. Rehan Yar Khan, Managing Director, Orios Venture Partners. We welcome you, Mr. Khan. Mr. Anshu Prasher, General Partner, Whiteboard Capital. We welcome you, Mr. Prasher. And Mr. Vikas Agnihotri, Operating Partner, Softbank Investment Advisors. We welcome you, Mr. Agnihotri.
Hi, thank you.
Okay, so with that, I would like to hand over the session to Mr. Bist. Thank you.
Thank you so much for the introduction, Garima, and thank you, the organizers, IAMAI, for inviting me as a fellow speaker or moderator with this fantastic panel of industry leaders and experts. Good afternoon once again, ladies and gentlemen, and thank you for joining me at the 15th edition of the India Digital Summit focused on an Atmanirbhar Bharat, or a self-reliant, or rather a self-sufficient New India, as the government focuses on making India a technological hub of thriving, independent, and more importantly, indigenous companies and ideas. And unlike my fellow panelists here, who I think are all in Mumbai, I am beaming live from Vigyan Bhawan in New Delhi. I am Atul Bist, Senior Assistant Vice President in Invest India, the government agency that partnerships. As the head of electronics manufacturing, technology, media, and telecom sectors, I promote the business and policy landscape that enables sustainable foreign direct and other strategic investments, in the ecosystem here. Invest India is unique in its form and function as an interfacing body between industry and the government, and housed within the larger Invest India umbrella is the Startup India program, a flagship initiative of the government of India intended to build a strong ecosystem for nurturing innovation and startups in the country that drive sustainable economic growth and generate large-scale employment opportunities. To commemorate its fifth anniversary, actually, Startup India organized Prarambh, Startup India International Summit, on the 15th and 16th of January dual format. The summit brought together top policymakers, industry, academia, investors, startups, and key stakeholders from 58 countries, culminating in an address by the Honorable Prime Minister himself, who announced the setup of a Startup India fund to support entrepreneurs in early stages of their startup's life cycle. Now, this 1,000 crore seed fund is something that we are still working on, and we'll let you know when the applications open. But anyway, we are here to talk about energizing and further accelerating investments in the startup ecosystem. So, Vikas, let me start with you. You and Softbank have had some traction in the startup ecosystem, and you have an eagle-eyed view on what is really happening around you. And what I would probably want to know from you is, how has the investment landscape changed in the last 4 or 5 years? And as the intellectual capital clamors for financial capital, right? How do you go about making certain about the way you operate?
Thank you, Atul. Absolute pleasure to be on the forum as well as with the esteemed panelists, and a big hi to everybody who's listening to all of us. So as you know, I mean, as SoftBank, we are late stage growth capital investors. We come in, we really look at companies which are already have been in existence with proven track records, as well as operators who have been pretty much proven. And that's the stage that we actually come in. So if you think about it, we can only come in a place where the ecosystem is vibrant, where there are loads of opportunities, and as you know, from a Masa perspective, as well as the ethos behind our own thesis of investment, we look at places where you have a big problem and the founder is looking through technology to solve that problem so that we have a big impact. Again, the fact is that there's again the fundamental belief that with the internet revolution, with technology and AI, you can fundamentally change the lives of people to make it into a better place. So if you go back, 4 or 5 years, and I remember my time that I was at Google. In fact, just before we started, I was mentioning to Rehan, uh, it was a very different kind of. In fact, if I go back to 10 years when I joined Google at 2011, there were not even 100 million people on the internet at that point of time. And nobody would have ever imagined this situation, the state, which is a great state that we are in today at that point of time. People would find it hard to believe that there would be, more than 300 million people on the internet. People would say the internet is actually it's an English oriented internet. No more than 250 million people can speak English. And yet today we have 700 million people who are accessing the internet. You had startups, but they were very few. You would look outside of the country at in those years to get inspiration of what the startup community was all about. In fact, I myself remember I was fascinated by what Israel was doing as a startup nation. But today I don't have to look that far because if you look at the numbers, and numbers always have a story to tell. We have about 54,000 startups that have taken shape till date. We have almost 3,200 of them that have managed to attract investments of about $64 billion in the country. They've actually added. There's a value creation that has happened. They are about $115 billion worth, and that's great because when you see some of that, it actually means that this is a great place to invest. The founders are actually doing a great job. Companies are adding value to the investors. Uh, and if I go back another 5 years, I think at that point of time, if someone had actually said that even as of date we will have 34 unicorns, people would have thought that people are mad. And today, to sit and say not only do we have 34 unicorns, we have at least another 50 odd unicorns that can happen in the near future. And could we have about 100 unicorns by 2025? I think it's all now more believable than it has ever been. So when you look at the way we, as I said, we are late stage. We come in with bringing three things that we believe are very key, especially when in industries which are growing, which is we bring capital, we bring connections, and we bring in console. Those are three elements that we bring into the table, and that's really what we think that adds great value to the founders at the stage that we come in. And the opportunities are all there. I mean, I think we are looking at opportunities, be it in fintech, be it in consumer, be it health tech. In fact, if I may say so, when we look at across the world, there are a couple of areas where there's very little progress that's being made in terms of technology, which is healthcare, education, agriculture, and construction. As well as I think SaaS is a big opportunity for India. So those are areas that we really look at. I guess I can add more as we go along with the discussion. Atul, back to you. I guess Atul's dropped to. Should we do a? Can we cut? Should we go ahead?
Yes. Yes, I think yes. I think Atul is facing some issues. If I would request either Mr. Agnihotri or Rehan to take over to move forward.
Rehan?
Sure. Well, thanks for that, Vikas. Great introduction there, and nicely summarized on our journey and the way ahead. Yeah, it certainly is an exciting time to be in India, especially in the technology space. As Vikas pointed out, the number of unicorns in India have been growing year on year. I just want to add some color to that statistic that he mentioned, where he said there are 34 unicorns currently. What is interesting is that 50% of those unicorns have come in the last 3 years. So that just shows the size of the growth of the market, right? A company can become a unicorn because it achieves a certain scale, and that scale is possible because the market has become so large. In addition to the unicorn story, I think 2021 will be a special year because we're going to see a spate of IPOs from technology companies, something which has been long awaited in India. Everyone has asked this question, hey, when are the IPOs happening in India? I hear about all the unicorns and I hear about all these companies, but there's no money back to investors, or there's no IPO that is taking place, and these stocks are not available in the listed space. I counted 5 announcements of IPOs for H1 2021, right? Starting with Nazara's IPO, where they filed their red herring prospectus, to Nykaa, to Zomato, Policy Bazaar, Delivery, multiple other companies. So I think this will be a very interesting year, because of that. And what this is going to do is that this is going to increase the confidence of investors in the Indian ecosystem, right? Which means more capital to India. And more capital means more entrepreneurs wanting to take the plunge and take the risk. More entrepreneurs means more forces driving the market. Now you have to understand the market is part a creation of natural demand and part a creation of entrepreneurial activity that causes people to adopt and start demanding products, right? So if the curve was like this so far, that curve is going to change, with all this capital coming back 2021 onwards. So I think this decade, which has just begun, is going to be an incredible decade. It interestingly comes off a weird 2020, a bad year, right? In many ways, a black swan year. And you're going to have this incredible decade now coming up. So very, very interesting times to be over here. Coming to ourselves, what do? We are an early stage technology fund. We were one of the earliest early stage funds in India. We like to come in at seed stage, right? Where, people have a plan and they have some of their team and they have some traction, right? They probably raised some money from angels like Sanjay Mehta, or from his incubation program, or from some other incubation program or some other angels. And now they need, let's say, $1 million to $2 million check to further validate their idea and get to what is called product market fit. Right? Product market fit means customers love my product. They're willing to, come back for it, and I can make some money off that product, right? So what we do is we come in at that stage. We give you A, capital. B, we come and we have this whole program, right? What we call the Misfits program. The reason it's called Misfits is because you're pre-product market fit, right? So you're not a fit yet. And also because at that stage, everybody's telling you, hey, yaar, pata nahi kya kar rahe ho life mein, ye pagal idea hai tumhara, right? Everyone from your family to your friends are like saying, hey, go back to your job, right? And you're this crazy person taking this risk. So we come in at that stage and we, have the 6-month program where we bring in a lot of outside mentors, successful founders who really come and work with you on product market fit, on hiring, on growth, on operations, and they 6 months later get you ready for Series A, right? So that's what we do. We've been doing this first from 2008. So first as angel investors, And then as a fund from 2014, we've raised 2 funds. And we also raised a sidecar fund. We managed close to $1,000 in that, 1,000 crores in capital. And soon we'll be out raising yet another fund. The sectors that we invest in, like I said, it's only tech and it's only India, right? So we don't really invest in companies which are from India, but for other markets. We say, hey, we don't understand other markets completely. We don't understand the US market, or we don't understand the South Asia market. What we really understand is India. We are really able to help you in India. So, bring us your India ideas, right? And there's a lot of opportunity within India itself, as we've just noted. So we come in, so our sectors are e-commerce. We yet believe there's a lot to be done in e-commerce. We've just about scratched the surface in e-commerce. There are all kinds of new things happening, like social commerce. We just announced an investment, in fact, today in a social commerce company. We like, and within e-commerce, we also like what are called D2c brands now, which are brands which are direct to consumer from the companies itself. The old model was I would go buy dealer distributors, now direct to consumer. We like agri-tech, which is a new sector for us. We believe because of the expansion of India into rural areas, there's a lot of adoption by farmers. So that's a new 2020, 2021 sector for us. We like media and gaming, right? Because of digital adoption, people are just consuming more online, whether it's content or whether it's playing games. Edutech, fintech. Then there's something called platforms that we like. We believe there's a lot of opportunity to aggregate small and micro entrepreneurs into platforms. So we did Ola back in the day. We did this, where a lot of cabs are aggregated under a single brand. We did a company called Go Mechanic, where they're aggregating garages, and so on and so forth, right? We've done lots of these platforms. So that's yet another theme for us. So those are some of our areas. We pretty much invest in everything tech and for India. So feel free to bring us your early ideas in there. Thank you. Let me now hand this over to Anshu for his introduction, because it seems that we are the only 3 who are online right now.
Thanks, Rehan.
And can you hear me, team? Hi, Atul here again. Can you hear me?
Yes.
Yes.
Good to have you back.
Okay, my audio is right now, but my video is still a bit of an issue. But yeah, Anshu, please go ahead. Thank you, Rehan. Thank you for your introduction. I think what you spoke about the Misfits program, it's very interesting. It's very innovative. I really like the term Misfits. And over to you, Anshu.
Thanks.
Am I audible? Because it seemed I'm not there.
Yes, Mr. Mehta, you're audible.
Okay.
Audible, your video is off. I think we'll hand it over to Mr. Prasher.
All right. Thanks, guys. So good to hear from fellow panelists. Very quickly about us at Whiteboard. We actually invest in businesses, as the name suggests, at the Whiteboard stage. We've been now an active investor in very early stage companies for the last 3.5 years. There are roughly 4 sectors in which we spend most of our time. Big spaces for us include fintech and financial services as a whole theme. We've invested in companies like Cred. We've invested in companies Jupiter. We've invested in an insurance platform called Unsurety. In consumer brands, or D2C as we call it, we have multiple investments, including a company called Generico. We were early investors in Dimension, Gourmet Garden. In social commerce and communities, we've invested in companies like DealShare. We've invested in Wish. We've invested in Leap.club, which is a platform for women in the workplace. And we're also investors in multiple B2B tech companies building SMB platforms, both vertical and horizontal, like Khatabook, Dukan, InVideo, and quite a few others. Uh, Fundamentally, where we come in, if I was to take the example that Rehan started with, is that we are an investor at a stage before a fund like Orios gets interested, because we kind of invest at the ideation stage. So we invest in businesses when they are just being conceptualized by founders within our network or sphere of influence. We're not active in social media. We unfortunately don't even have a website. So most of what we end up investing comes from our network that we've created. And one of the most interesting and exciting things for us last 3 years, coming back to the ecosystem that was referred in the earlier conversations as well, is the fact that we think we kind of ripe for a very different level of disruption at our stage. Some of the opportunities, some of the quality of founders we are coming across is something we haven't seen before. And that probably also goes back to how the ecosystem and high quality of companies that are coming up now, largely led by founders who've been a part of these interesting, successful technology companies. So this probably second wave of technology companies in general, bringing in more entrepreneurship into the ecosystem. So the flywheel kind of is working now, and that kind of keeps us excited and busy at the same time. Given we are yet to hear from Sanjay, I'll probably let Sanjay have a say before we jump into more conversation.
Thank you, Anshu. Sanjay, I was just researching your organization last night a bit, and I came across this one very important and sort of a fact, right? That you are the first VC to invest in early stage startups using India Safe Notes, right? So probably if you could just tell us a bit more about what the India Safe Notes is, and then use that to build on what you do as an organization and your strategies as an organization.
Sure. Thank you, Atul. So the way we look, being an angel, to close a deal, it usually used to take across 2 months to 4 months for closure of a deal. Uh, at early stage, there were not enough lead investors, and most of the lead investors who were successful typically became VCs. So there was not enough, leads who were curating deals at very early stage, and everybody wants to write a large check. So there were a couple of gaps what we saw across. I personally had invested in Silicon Valley companies, and safe notes have been very popular. So we thought, why not bring safe notes in India, make life very simple. So here, over the counter, we can close a investment agreement, simple 4 to 5 page document where we sign off. We don't take any rights, no board seats, nothing. I mean, what a typical shareholder agreement would have. And what we did across at 100x, our model is to invest in a batch mode, classes. So we create a class, a batch, a cohort, and invest. And the plan is to invest across with a cookie cutter approach, 25 lakhs each. So each batch, we would invest 10, 20 companies. Plan is to invest into 100 companies every year. Hopefully, by 2022, we should be able to do that. And like how Y Combinator does it in US, we would like to become a discovery platform for investors across India. So a lot of the angel networks, VCs, have invested into 100x portfolio companies. We are in fact announcing our next 10 startups on 21st, that is tomorrow, and day after we have a repeat session. And so the focus is to get in early, do the first check. We believe that ideas are very fragile at early stage, and the first check or a social proof what 100x brings in from a valuation perspective, it is unparalleled. So we work with those startup founders. We have a motto of mentoring unlimited, and we end up working closely with these founders, and we help them raise the next round of funding. uh, just to add across, out of the 39 companies what we have funded till date, we have generated an employment of 430 people. So that's the kind of impact what we look at also in terms of how much employment we are able to generate through our portfolio companies. So it has been a great journey helping all these companies get we call ourselves as a simplified funding kind of stuff. So we have tried to simplify it with India safe notes, quick closure of deal and investment into any startup.
Okay, great, Sanjay. And since we are on this theme and the larger theme of strategizing investments in the startup ecosystem, you've spoken about a lot of innovation in the way funding is done, right? I mean, that's what I've gathered. And then I think that segues wonderfully into the question that I started this session with, and into the question that I asked Vikas was, what has changed in the largest startup ecosystem in the in the last 4 or 5 years? I mean, what do you see other than the innovation in the way you fund, but what has changed in the larger community itself?
So I would say that Atul, if you look into it, founders have become quite mature in that sense. If I look into in 2010-11 when I started angel investing, uh, the knowledge about entrepreneurship, the understanding of how to go about raising funds was quite limited in that sense. Now it's quite widespread. Number of startup deals have just grown significantly in that sense. In parallel, investment available, the angel networks have grown significantly, while the ratio still remains skewed in that sense. So capital is still chasing good deals, which continues to remain as a challenge. But there are quite a lot of platforms which are there. Online funding platforms or angel networks have emerged across. So the opportunity for entrepreneurs to raise capital is now abundant in that sense. So that is quite there. And but the ask from an investor side has increased drastically in that sense. Investors are looking at quite a lot of tick in a box before they commit any capital in that sense. So from an 100x perspective, that gives us a good opportunity to fund at an idea stage, pre-revenue stage, work with the company, build it kind of at early stage, and then work with VCs closely to ensure that we feed in the deals to them.
That's a great point, and what I again the key takeaway from what you said, Sanjay, is that as founders themselves are becoming more used to the system and getting more mature in the way they approach entrepreneurship, there's evolutionary progress in the way VCs and you guys as fund people view these founders, right? And then this sort of sentiment takes me to what Rehan mentioned previously. Rehan, when you see your founders get more mature in the way they approach the ecosystem, in the way they approach the whole process of entrepreneurship, how does that fit into your Mystics program?
Well, the way we see it is that seed is actually a multi-year and a multi-round stage. So what happens is that people have this idea, right? They identify a sector and they believe that there's a white space in it, and then they start building a model for that idea. They have to put together a team of co-founders. They have to create that initial product. They have to market that product. They have to have capital to do all of that, right? And then they go out to market and they start getting a lot of feedback from customers. They face competition, they face pricing issues, logistics issues, all kinds of things, and they start remodeling their product, right? To be more suitable to the feedback that they're receiving or the competition that they're facing. Now, this leads to pivots, right? During that journey, this leads to additional capital being required. So seed is not a 1 year stage. Seed is anywhere from a 1 year to a 4 year stage. While they're doing that, some of our most successful companies have been at seed stage for 4 years before they perfected that model, right? And anyone who's been an entrepreneur over here can probably relate to that, right? And after you have the seed stage, of course, then you have every year sort of you're kind of raising capital, Series A, Series B, Series C, because you've got that elusive product market fit. But seed is a different stage. It's different from all other stages in that sense. So you have Sanjay who's at seed stage. You've got Anshu who's at seed stage, and you've got someone like us who's coming in right at the end of seed stage. Just before Series A, picking up the baton at that point in time, and carrying the companies forward. So our Misfits program is geared especially for that last part of seed, where you've done work with Sanjay 100x VC, you've done work with angels, and maybe you've even raised money from another seed fund, right? But you still need more capital, you still need more inputs before you can get to Series A. We specialize at that stage. That's where that Misfits program comes up. We have traction, you've made a pivot, we help you really sort of think through, hey, what is missing and how do we get you ready for Series A? That's what we specialize in.
Absolutely. And I was just thinking, Anshu, since Rehan mentioned you, and the fact that you too are a seed investor yourself, Rehan, clearly explained in terms of the gestation period and the timelines and all. It could probably go all the way to 10 years, right? And as someone who's involved before a Rehan or a Vikas can walk in, as a seed investor, right? What are your thoughts on what's happening around you and the whole timelines involved?
I think that it's as Rehan rightly mentioned, right? I think it's lesser to do with timelines. It's our own way of. So as I said, that we call ourselves Whiteboard because that is the stage at which we invest. Most of the businesses I mentioned earlier, we invested when they were ideas. In most of the cases, founders were yet to even move out of their previous jobs when we made commits to them. But the journey from there to becoming eligible for whether it's next round of funding, whether it's even getting your first customer, putting your product in place, all of those are step shifts for a company. They're not very linear. So what you expect is both in terms of founder maturity, and I think one of the things which we benefited from over the last 3 years is that the ecosystem, whether it's in terms of hiring, whether it's in terms of technical expertise, whether it's in terms of funding opportunities, the ecosystems matured a lot at those stages, which is why even in a generally not so great year like 2020, India still saw $10.5 billion, which was invested, and even today we are sitting on a dry powder of India specific funds of north of $7 billion. So that there is capital available for ideas and businesses that make sense. The question which becomes tricky, right, is that there are businesses that are trying to disrupt what has existed, which is what all of us invest behind, whether it's Sanjay, whether it's Rehan. And obviously, not all those ideas would work in the shape and form how the founder has conceptualized. So there are a lot of twists and turns to the journey. The only the one fundamental premise that I've learned is to stay disciplined in what you do and to stay patient with your founders. I think outs and that's something which is heartening to see in the ecosystem as a general, in terms of people understanding that you have to play this game only if you're there for a couple of decades. And that's to me the biggest realization. And the stages that you mentioned, Atul, is because it's so fluid. You would never probably have a formula for the same, but you certainly know that companies and founders who are resilient enough and who are solving a problem that is large enough will eventually find capital, people, resources, clients, everything they need. But there needs to be sufficient amount of patience on all sides.
I think that's a great response. And what I really, find interesting in what you just said, Anshu, is, you not sticking to particular stages, but the sort of fluidity in the whole process. And that takes me to Vikas. Because, I mean, the general sentiment here, and I mean, this is what we've discussed also, is that Softbank is a sort of a very late stage investor. But if there is fluidity in stages, I'm sure this is something that SoftBank also recognizes, right? So, how open are you to, let's say, a founder in terms of, when he or she tries to reach out to you? At what stage do you typically expect them to reach out to you? Again, considering there is no stage and everything is very fluid.
Let me just first start from where actually Anshu left, and I think Rehan also mentioned a little bit. And I'll specifically address your question too, in terms of when people should reach us. But you spoke about capital and you spoke about patient long-term capital, and I think that's really where SoftBank certainly comes in. We bring capital growth, and we have a lot of patience. And the way we look at it, in fact, if you look across all our portfolio companies, from be it Unacademy, Lenskart, Delivery, First Try, Policy Bazaar, etc. Sorry, I'm not doing a full rundown, but each of we find that when founders have gone through an entire process of having reached the stage where SoftBank really is coming in. As I mentioned earlier, they are proven concepts and proven entrepreneurs. And then the question becomes that if you were to give them large amount of capital and ask them that if capital is not a restraint, what's their vision? How far can they go? And it's really important because what then you look at is that you're truly trying to help them build businesses of scale, and with the connections and the console that SoftBank really brings in, can you take them across geographies? And as well as you see in the SaaS business, you could just be operating out of India, but you could actually have a TAM which is completely global. You could actually take many of the companies that I spoke about from here to global. So with capital coming in, some of the ambition, the vision that some of these founders has is multiplied tenfold to hundredfold in terms of what they can achieve. And if you can provide them with that patience, also what capital does is it attracts the best of talent. And talent is something that's super important, and the culture of the organization when you're building organizations. So I think the role of capital becomes really important. In terms of what you said, at what stage should people come and meet us? This is more personal. I wouldn't say this is the SoftBank house view. But I would presume that post your Series A, I mean, in terms of when you've got that, and you think it's still early for us, but in an informal way, you should start meeting out. And we have an amazing team on the investment side, which is headed by Sumer. You should actually reach out and meet some of us. In the good old days, I could have said, come and have breakfast or have some coffee or whatever it is. But reach out and make us part of your growth story. Because rather than looking at a term sheet at a later stage, it'll be amazing to see some of these founders in terms of how they've been building their businesses and get a pulse of everything that they've been doing. And it just becomes an easier process. But you need to have that conviction that you are truly, if you were to get capital, truly have the vision of sitting on something that will, through a technology, completely transform, as I said, way people live and make life a better place. So that's the way we really look at it. I think the other thing that people haven't mentioned, which I think is great for the ecosystem, is Atul, I think, and Rehan and Anshu and Sanjay can add, but there used to be a dearth of talent 5-10 years back. I think there is enough and more talent that is staying back in the country, coming back into the country. And it's also, you can actually look at it in terms of just the hubs for startups. Earlier, it used to be only Bangalore, then it became, the Bombay or the national capital. But now you have Goa and you have Jaipur and, other places that are coming up. So that's the amazing part of this country and the depth of talent that you have in this country, and creating a right environment this is a very vibrant and a great ecosystem that's been made, which is going to do great and wonders as we go along.
Thank you so much for that. I mean, and Vikas, you not only answered my question, I was also going through the questions that we are receiving from our audience who are listening to us. And invariably in your answer, you also answered one question that I received, which was how important is the path to monetization when looking at an early stage bet, right? So thank you for that. And since we are now on the questions, and some of them are really good questions, we are receiving from our audience. Anshu, I'll probably pitch this to you. So when you're looking at an early stage bet, right, where the addressable market is not really known, how do you assess the quality of the business?
I think
Apologies. So the way it typically works, Atul, is that even though addressable market of a business may not be completely known, but there are always adjacencies and data points that you have access to, which give you a reasonable sense of what the founder wants to disrupt. To kind of give you an example, we invested in a business which was going in the men's innerwear market when it wasn't cool, trying to build a D2c brand around it almost 3 years back, 2.5 years back, called the Mensch. But there are reasonable amounts of proxies available in most technology data businesses, where you're able to get a sense of how big can this be. And I'll go back to and use an analogy from what Sunil had said, right? That when you're looking at businesses at that stage, we kind of try to understand if there were very little constraints, whether it's of capital, whether it's people, whether it's anything else. If a business had all the wings to fly, how high can it go? And most of the times, the answers that the founder gives you a sense of what kind of monetizable opportunity is he running after, which is a reasonable estimate to start with, especially because we invest at stages where some new categories are being created, some new business segments have not existed before, but there is reasonable amount of data that I think is available for most of the unmonetized businesses that we've invested in as well, where you are able to take a broader stab at how large could it be if things go to plan, which is sufficient enough information for us to take an investment decision.
Absolutely, that makes a lot of sense. And I'll just take this to Rehan now. Rehan, I remember when you were describing your modus operandi, if I may, you spoke about how a fine balance between financial demand and consumer demand drives the ecosystem, right? And there is a question which then is sort of related to that, about the markets in general. So the question that we've received from the audience is: do you think private markets follow public markets in terms of valuation, or is it the other way?
It's a bit of both, I guess, right? The worlds are fairly interconnected these days. The public market is a stage at the end of the day, right? So there is some trade-off between the two. Though I'm not a public markets expert, right? So I can't give the most qualified answer over here, right? Maybe somebody like Vikas, who's closer to late stage investing and has to really keep an eye on price, will be better suited to give that answer. We come in at a stage which is very early. Price valuation of the round is not very important to us. What we are really looking to do is back a great team, work with them very closely, give them enough capital to get to Series A, and that's what we do, right? At our model. But great liquidity at the public markets will certainly drive capital in the private markets, right? And it will, there is a correlation to valuations as a result, right? I mean, great valuations at the public market level inspire people to put in money in the private markets, hoping to exit those companies at the public market and get some of those windfalls of that excellent pricing, right? So the whole thing is, of course, correlated to each other. Right? Does the excitement of the private markets drive the public markets? Possibly, right? Because you have all these, like, look at the situation in India right now, and let's say you are a public market only investor, and you're reading, the newspapers or online media, and you're hearing about all these cool companies out there, and you can't access any of them in the public markets, right? So when their IPOs come, then you'll be waiting there, ready to subscribe to those IPOs, or ready to buy some of it in the secondary market on the public market. So yeah, right. I think the excitement is well founded, because the Indian market is just becoming so large, right? I think in 2020, because of lockdown, adoption has simply accelerated, both in terms of width and in terms of depth. I went, my wife and I had gone on a tour across India. During the pandemic, we took a 45-day road trip actually across India. We figured we'd never get this opportunity again, because of travel schedules, etc. And of those 45 days, 18 days were in rural areas, right? And I couldn't believe the amount of tech adoption in those areas. We saw nice smartphones. I ran into a camel farmer, and he was telling me about how he's checking things online, right? And I had a 1-hour conversation with him. So this thing has gone really deep in our country. It's penetrated all parts, right? People sitting in boardrooms in Bombay and Delhi can't fathom how deep it's actually gone.
Oh, I completely agree with you on that, Rehan. In fact,
Atul, if I may add here, on
yes,
the public market and private market,
sure.
I believe as an investor, I believe, in public market, one can't influence an outcome. You can't. If I buy Reliance shares, I can't influence price. Upar jayega, niche jayega. Nothing. I mean, you just wait and watch. In private markets, we, all of us as a startup investor, we actually work with the startup founder very closely and influence an outcome. So it's a big difference in the way we work across. Public market, it's all secondary, right? You buy shares from one who's going to sell, it's just between investors. Whereas what we do is primary, where we are investing into the company. So we are building those companies. So from an investment perspective, it's quite different ethos what we bring across on the table than a public market investor.
So essentially, what you're saying, Sanjay, is that you are not only working very closely with the founder himself or herself, you're actually investing in the founder, right? So then that brings me to the next question: how do you assess the quality of a founder?
So go ahead. Anybody else?
I mean, Sanjay, you can start, and then I can take this question to everyone else.
Sure. So when we assess, startup is not a single variable, right? Only a founder would not make a deal, kind of stuff. So startup is all about multiple variables which we need to look upon. So what we at 100x look upon is a founder's right to win. Does it have a domain expertise? What is the right to win? And second is, we look at the business model. What's the kind of, how do they make money? What is the market size opportunity, thirdly? And unless we see a conviction of 20x kind of return, we don't invest into any of the startup, because end of the day we have to look at exits. So in overall, what I would say across is three things which as an investor we look upon. Is there money to be made? Are these people who can make me money? How much money I can make?
Absolutely. Would anyone else would want to add to that, the sort of qualities you look in a founder? Vikas, your thoughts on this?
No, as I said, we are late stage, so we are anyway investing in proven founders and proven concepts. But I think it's a great question. You're obviously looking at you're actually looking at founders who have built and have the ability to build amazing organizations going ahead. Founders who have built a great culture, founders to whom users matter, who are actually obsessed in terms of how technology can transform whatever problem that they're trying to solve in their respective fields. And and create a massive impact from a user experience or just humanity overall, as well as the largeness and the bigness of their thought and what they want to do. Because and actually how I think how it just how it's also to do with how honest they are in terms of what they're trying to build and where they want to take. Because at the end of the day, we are also responsible for the LPs who put money in, and it's very, very important that you choose the right kind of founders and companies. It's just not companies, but founders and companies that will actually, stay with you, grow with you, and help in that in that context. So that's the way we look at it. It's little, as I said, a little easier because a bit of a filtration process has already happened by the time we are looking at it. But it's a lot tougher, I would say, in early stage.
Sure. And as I'm trying to, connect the dots and, make a coherent story of everything that's being discussed here, I'd like to go back to, what Rehan said about his little trip across India. As Startup India, what I've seen is in the last 5 years, we have received close to 3.5 lakh queries, of which 65% have been in Hindi and from rural India. So you're absolutely right, Rehan. There's a lot of energy, there's a lot of traction in rural India, and it's not just focused on the Bangalores or the Hyderabad or the Gurgaons of the world anymore. It's all over the place, right? There are 30 union territories and states in India, and all of them now have a startup policy. There's a startup in each one of the 579 districts in India, and that is the new India story that we are all here to discuss and talk about. So the one thing that always interests me, in discussions such as this, is that from a government perspective, right? A lot of things are happening, a lot of things are being done. There is a lot of focus on this startup community, but what else do you think can be done from a policy perspective, from the government's side, right? Which can really, sort of, again, energize the whole system, accelerate and, push, if needed, development of the startup system. I mean, yes, it's doing great. I mean, you guys have been participating in a lot of success stories yourself, but what else can be done? And this is something that I would, want to know from each one of us. So I'm just going to throw it open. Let's probably start with Anshu.
So I think the biggest thing that there is that needs to happen from the government side, right, is that we've been reading a whole bunch about regulations specific to sectors. For example, we are large investors in manufacturing, tech, and IoT businesses, and we still think that there is a lot more that can be done on those businesses because they are slightly higher gestation, longer period businesses that may not get the same interest from traditional VCs, but at the same time, that capability needs to be developed. And we just feel that some of those places there could be better incentive structures built out. We see a lot about it in the newspapers. We read a lot about it, but most of it, when it comes to action on the ground for our startups, it doesn't. There is not that much, especially for these specific sectors that traditionally needed at least 2 decades, 3 decades of support before they've started showing any benefits, even in countries like the US. So I think if at all, given there's been a very proactive government and they've been doing a lot of stuff, I think this is one area where I think there can be more done. And given we are running short on time, I'll quickly pass on to the other panelists as well, so that we can ensure we run on the right time.
Sure, absolutely, yeah. Sanjay, would you want to go next?
So I think one of the recent happenings is there's Section 281C in income tax, which has been invoked on exits, where a buyer has to validate whether the seller of the shares, secondary shares, has no liabilities or no dues. A transaction is like delayed for almost six months, collecting all this information from the seller investor. It's just crazy. So ease of doing business is something, I mean, especially startup investing, I mean, this is like a big showstopper which has happened.
Okay, point noted. Vikas, what are your thoughts on this?
I think we have a hard stop, so I'm going to use this time to say I agree, and I'd like to thank the panelists as well as all the people who've been listening from our side. Rehan, your last words.
Oh, thanks a lot. It's been a great session. I mean, policy is a constantly evolving thing. The policymakers are coming up with things, they're fixing them. I mean, I'll just quickly tell you from India Venture Capital Association side, since we represent the venture capital body, what we've always pushed for is a stable framework, right? That we don't want too many policy changes, a friendly framework for overseas investors, and a friendly framework for domestic capital. Right, is what we basically pushed for. We believe that domestic capital is a huge source that needs to be tapped, and a lot more has to be done in there. I mean, I won't get into all the little details of it, but I think the government has been very progressive about the startup sector. They recognize its ability to create jobs. They recognize its ability to innovate, and it has proven so. And now soon, with its importance on the stock markets, it's going to gain even more prominence going forward. So, I think that's where we all stand on a policy perspective. I appreciate everybody's time here, Atul and all my fellow panelists. Thank you very much.
Thank you so much, Rehan. Thank you, everyone. Thank you so much. I mean, this is a great insightful discussion. I enjoy a lot, and I'm sure our audience, they too gathered a lot from this. And over to you, Garima.
I'm sure, Atul, looking at the questions that the audience had posted, I'm sure they enjoyed the session. And thank you to all the panelists for joining the session today. Despite certain technical glitches and hurdles, we had a great session. And we will see you all in another session in a short while. Meanwhile, I would request everyone to please visit our virtual exhibition space to check out if for any offerings from the partner booths. And see you all. Thank you so much for joining in.
Thank you.
Thank you. See you.
Bye.